Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. If you're a business owner with less than perfect credit, or maybe you've already gone the traditional route and got turned down, then this video is for you. Many entrepreneurs hit this wall. They go to a bank thinking they're about to get the funding that they need, only to find out that the bank does not care about the vision, the hustle, or the potential of their business endeavors. They care about whether your business fits into their risk parameters. And if it doesn't fit, you get denied. And that's the frustrating part about business funding. You don't need funding because you're failing. You need the funding because you're growing and you actually want to keep up with that growth. You might need inventory, you might need equipment, you might need working capital, or maybe you need money for payroll, for marketing, repairs, expansion, or just breathing room. But when your credit is not where lenders want it to be, the door to traditional financing starts to close very quickly. Now, here's the good news. Just because one bank told you no does not mean that it's over. It just means that you may need to look at lenders that are built differently. That's where online lenders and alternative financing options come into play. Now, these companies tend to be more flexible, more realistic, and in many cases, more open to working with business owners who don't have a perfect personal credit profile. So in this video, we're going to break down some of the best small business loan options for bad credit. We're going to discuss which lenders work for your credit score, and that's going to be for scores in the 500s or low 600 range, what type of funding that they offer, and what kind of business they are best for. And we'll actually talk about what you should look out for before filling out this application. Because getting approved is one thing, but getting approved for the right type of funding is something completely different. By the end of this video, you should have a much better idea of where to start, which lenders fit your situation, and how to think about bad credit business funding without wasting time chasing the wrong options. So without further ado, let's get right into the video. Before we get into the lenders, I want to make something very clear. A lot of people take denials personally when they get rejected for a business loan. They start thinking maybe their business isn't good enough, or maybe they're not ready, or maybe they did something wrong. In most cases, that's not true at all. Traditional banks are just naturally more conservative. Banks usually want strong credit history, clean history, established revenue, time in business, and low risk across the board. And if your score has taken a hit, if your revenue is inconsistent, or if your business is newer, they often do not want to deal with it. They want the safest file possible. If you need money soon, or if your profile is rough around the edges, then this process can feel like running into a brick wall. And that is why online lenders and fintech companies have become so popular. They're not necessarily easier because they're generous. They're easier because they evaluate applications differently. Some focus more on revenue than credit, and some are simply just more willing to say yes when everyone else says no. Now, that doesn't mean every alternative lender is automatically a great deal. You still need to compare offers, check terms, understand repayment structures, and make sure the funding actually does help your business instead of just putting you into a deeper hole. That's why shopping around really does matter, because a lender may approve you, but that doesn't automatically mean you should accept the offer. You want the best fit, not just the first yes. With that said, let's start going through some of these lenders if your credit is less than ideal. The first option worth looking at is OnDeck. Now, OnDeck has been around for a while, and they have built a strong reputation in the online small business lending space. What makes them stand out is that they're generally geared more towards established businesses rather than just having a brand new startup. So if you already have been operating for 1 year and your business has some traction, this can be a lender worth looking into. The OnDeck term loan is a one-time lump sum of cash with eventual options of applying for more. Now, the loan terms may range from $5,000 to $400,000 with repayment terms up to 24 months. And this is a great loan for large investments into your business, or maybe buying equipment, maybe you're renovating a space, maybe you're covering a one-time large expense. Any of these things can be a great reason to get this loan. Another reason many business owners like OnDeck compared to traditional banks is the application process is usually much faster. Not to mention, OnDeck can give you an idea of what you qualify for without immediately slamming your credit with a hard inquiry, so you can do a soft pull. Now, in order for you to actually qualify for this loan, your time in business once again should be at least 1 year with annual revenue of $100,000 with a credit score at least 625. That's going to be your personal FICO score. And you want to have an active business checking account. There are some industries that may have restrictions, so you may want to check that out on their website. Now, if $100,000 sounds like a lot, I want to break this down into simple terms. What you really need is $8,333, and you need to have that deposited into your account 3 times for around $25,000 within 90 days. If you have that, that is essentially a projection of $100,000 at the end of a year. I would say that On Deck is best for established business owners who may not qualify for traditional financing, but still have enough operating history and performance to make a solid case. So if your business has been running, producing revenue, and you need either structured funding or revolving access to capital, On Deck can be one of the most practical options to explore. It may not be a perfect fit for every startup or every low revenue business, but for the right business owner, this can be a strong tool. The next option is LendZ, and this one is interesting because it works a little differently. Instead of thinking of LendZ as just one lender, it's more helpful to think of it as a platform that helps connect business owners with a range of loan products and lenders. This can be valuable when you're dealing with bad credit because you don't always know which lender is most likely to work with you or your specific credit profile. Now, one lender may care heavily about your credit score, another may care more about revenue, and another may care more about time in business. Another may be open to just having a startup company. So instead of applying for one lender at a time and guessing your way through the process, a platform like LendZ can help you compare more possibilities. Now, LendZ has loan amounts from $5,000 all the way up to $2 million with repayment terms that range from 3 months to 5 years. Another attractive point is that this platform allows you to check your options with only a soft inquiry. To get approved for a LendZ business loan, you generally need to have a business at least 6 months old with $50,000 in annual revenue or a personal credit score of 525 to 660. LendZ can require documentation, typically including 3 to 4 months of business bank statements, a driver's license, a voided business check, and for some products, they may even ask for business tax returns, but for the business loan, they shouldn't. And to make this actually seem more obtainable, think about it like this. You just need $4,166 deposited into your account for 3 to 4 months. I mean, honestly, if you did direct deposit from your job into your business bank account, you might be able to hit that within around 3 to 4 months. So if you're in a position where you have been denied before and you're unsure what kind of loan you may qualify for, or you want to compare several possible lenders, then LendZ may be a smart place to start. Sometimes the best move is not picking one lender immediately. Sometimes the best move is comparing the field first. Now, let's talk about one of the biggest names in this conversation, and that's going to be Biz2 Credit. Some of you may know I did a full review on Biz2 Credit. I was approved for one of their loans. I'm going to link that video right here if you want to watch that. But if your credit score is on the lower side, this is one of the options that gets a lot of attention, and for good reason. Biz2 Credit is often mentioned because they're more open than many traditional lenders when it comes to working with business owners who have weaker credit profiles. Now, you can qualify for loan amounts from $25,000 all the way up to $2 million, and repayment terms can range from 12 months to 3 years. To get approved for a Biz2 Credit business loan, you generally need to be in business for 15 months and you should have $100,000 or more in annual revenue and a 575 credit score to a 650 personal credit score. Now, requirements can vary by loan type. For example, they have a working capital loan versus a term loan with faster 24-hour approvals for qualified applicants. Now, I have actually been approved for a loan for $20,000. That was the working capital loan, so you don't need to have $100,000 in annual revenue in order to get approved. However, I can say they will ask you for the last 3 to 6 months of business bank statements. They did not ask me for personal or business tax returns. They didn't ask for a profit or loss statement, but still, I got this information directly from the website, so I would still kind of keep it in mind that it is a possibility. Now, let's be honest, if your credit is lower, you should not expect miracle terms on this loan. That's just the reality. In lending, risk affects pricing. So yes, the rate or terms may not look as pretty as someone with a 750 credit score that they would get from a traditional bank. But when you need funding for your business, access can matter just as much as cost, and a deal does not have to be perfect to be useful. It just has to make sense for your business. One thing to always pay attention to is revenue. In many cases, lenders who are more flexible on credit become stricter on business performance, and that's how they balance risk. While Biz2 Credit may accept lower credit scores, they also expect stronger revenue to support the application. And that's really an important lesson for anybody watching this right now. For one part of your file to be weak, another part has to be stronger. So if your credit is rough, your business revenue may need to carry more weight. If your business is new, then your personal credit profile may need to be better, because lenders are always trying to solve the same puzzle, which is whether you are likely to repay them. Biz2 Credit can be a very strong option for established businesses that can generate real revenue, but maybe the owner has bad personal credit. If that sounds like you, then this is definitely one of the names that you should have on your radar. Once again, I did an entire video giving you my opinion. Now, my personal credit is very good, so I did turn this loan down, but because it is a soft inquiry, every few months I check and see what the new terms are, because they might change, and then I might, accept this loan in the future. But at the time that I made that video, I didn't think it was good enough for me. The next lender worth discussing is Bluevine, and Bluevine has become a recognizable name in the business finance space. Now, I do have an entire video on Bluevine. It's focused primarily on their business line of credit, but I do get into some data points. If you want to watch that, I'll link that video right here. Now, they provide business checking products as well. They do have a broader ecosystem that makes them more attractive to business owners who want more than just one-time funding. Bluevine also offers business term loans up to $500,000 with a 24-month repayment term. Now, they require a minimum 625 FICO score and at least 12 months or longer in business, and $10,000 or more in monthly revenue, or $120,000 annually. Your business must be a corporation or LLC in good standing with no recent bankruptcies. And if you do have a $2,000 or more average monthly bank balance, that would be good. It's actually a requirement, and that'll also lead to faster approvals if you connect your business bank account. Now, Bluevine can make sense for businesses that have at least some track record behind them, and in many cases, they want to see around, again, that 1 year in business along with certain levels of annual revenue that you have to hit. And compared to some of our other lenders on this list, that revenue threshold may feel more obtainable for smaller businesses, which is one of the things that makes Bluevine more attractive. So this will also be a good reminder that you should not just focus on the minimum credit score. You also need to look at the full picture. Some lenders may have slightly higher score requirements, but more reasonable revenue requirements. Others may go lower on the score, but demand much stronger revenue. But the best lender for you depends on how your full profile comes together. Bluevine is one of those options that can work well for business owners in the middle zone. Maybe your score is not strong enough for the bank, but your business is not in bad shape either. You may have some time in business, you may have some revenue coming in, and you may just need a lender that's more flexible than a traditional bank without moving into more aggressive or expensive forms of financing. Now, if that sounds like where you are right now, then Bluevine is definitely worth considering. When it comes to business funding, one option that does not get talked about enough is the PayPal business loan through Loan Builder. And this is one of these products that can make a lot of sense for the right type of business owner. Now, I also have an entire video on this business loan. I was approved for $52,000. I'm going to link that video right here if you want to watch my review. Now, this is a fixed term small business loan ranging from $5,000 to $200,000 for first time borrowers and up to $300,000 for repeat borrowers. This isn't one of those business funding products where they're telling you there are no standards whatsoever. PayPal is still looking at the full picture of your business. For this PayPal business loan product, the company says that it requires credit checks and is based on the overall profile of your business. PayPal also lists baseline requirements on their website. You need annual revenue of at least $33,300. In other words, you need $2,775 per month, and you need to be in business for at least 9 months. You also should have a PayPal business account. Your credit score can range anywhere from a 550 to a 620. Now, this is important to understand because this is not really a startup loan for somebody who just opened up the doors yesterday. You do need some business history, but this is better suited for an existing business that already has some revenue coming in and wants access to capital without going through a traditional bank process. The one thing that's different about this particular loan is that it has a weekly fixed payment structure. On one hand, that can be a positive because it creates consistency. You know when payments are coming out, they come out automatically, and you can build around that. On the other hand, weekly payments can feel a little tighter on the cash flow than a monthly payment if your business is already stretched thin. So this is the kind of loan where you need to ask yourself a real question before taking it. Is this money going into something that is actually going to help the business grow, improve operations, or create more cash flow? Because if the answer is yes, predictable weekly payments may not be a problem. But if you're borrowing just to survive with no real plan, then any repayment structure can feel really heavy. Overall, the PayPal business loan through Loan Builder is attractive because it is fast, it is very transparent, and it is a great alternative financing product. However, it's not magic money and it's not for every business, but if you already have a PayPal business account, you've been in business for at least 9 months, and you have solid revenue, this can be one of the cleaner funding options to look at compared to some of the other more aggressive products in the alternative lending space. Now, after hearing all of these names, the obvious question becomes, which one is the best? And the truth is, there is no universal answer. The best lender depends on your business revenue, your time in business, your personal credit profile, urgency, and what you actually need the money for. Now, if you are a newer business, one option may fit better. If you are a more established business that's generating solid cash flow, then there are other stronger options for you. If your personal credit is extremely low, you may need to focus on lenders that underwrite based on cash flow. And if your score is a little bit higher, you may have access to better structures. This is why comparing really does matter. Don't just ask whether you can get approved. You want to ask whether the financing actually makes sense for your business. Is the repayment term realistic? Ask whether this loan creates leverage or just pressure. Funding should solve a problem and create an opportunity or improve your position. It should not feel good for 5 minutes because money hit your account. That is especially important for business owners with bad credit because the margin for error is even smaller. You really can't afford to take on a bad product just because you're excited that somebody said yes. Be patient, compare offers, read the details, and think about the cash flow, not just the funding amount. I want to thank you guys so much for watching this video. At the end of the day, bad credit doesn't mean that your business is done. It does not mean that you don't have any options, and it definitely doesn't mean that you should stop looking for ways to grow. What it does mean is that you need to be more strategic. So you may not be able to walk into a traditional bank and get welcomed with open arms. That's fine. That doesn't mean that there are no lenders willing to work with you. It just means that you need to understand the landscape and find the lenders that are built for your stage, your numbers, and your reality. The biggest thing is this: don't just assume that a denial is the end. Sometimes it's just redirection. Sometimes you are applying to the wrong lender, the wrong product, or the wrong category for your funding options. The goal is not just getting money, the goal is getting the right money. So if you are a business owner trying to secure funding with bad credit, start by understanding where your business stands today. Know your revenue, know your time in business, know your credit profile, know what the money is for, then shop intelligently. And if you want to actually rebuild your credit or repair your credit, I have an entire credit repair playlist that can help you with that. This is how you give yourself the best chance of getting approved without putting your business in a worse position. And as always, I want to thank you guys so much for watching this video, and you all have a wonderful day.